What's going on, guys? Mike here, and today is episode 7 of the Wealthsimple portfolio update. So obviously, like every other episode, we are going to just kind of look over the changes in the past week's performance of this portfolio, and we're also just going to be kind of looking into what has happened over this past week. We had some things happen with some earnings reports, which I did kind of forget to mention in the past week's episode. That we were kind of going into earnings week, so we're gonna kind of have some random volatility, some red, some green, just based on some earning reports from companies. So we're going to look and see what kind of happened to Tesla. We're also going to look at Netflix. They also had some earnings that they released this week. I'm also going to just highlight a few upcoming earning reports that are going to happen next week. And then also, I just want to touch base on kind of a rule of thumb that I've learned over the past little while that is kind of interesting on the PE ratio, the price to earnings ratio, in regards to the S&P 500 and the rule of 20. So I'm going to explain that at the end of this video, so definitely stay tuned, and let's just get started. So let's take a look at the update on the portfolio this week. So this week was my bi-weekly contribution of the $185. So I did buy 5 more shares of XEQT, and for those of you who are new, XEQT is my kind of my core holding. And then I did buy some fractional shares of Power Corp, Enbridge, and TELUS. And then it just worked out to be 1 share of SRU, which is Smart Centers Real Estate REIT. If you don't know, what SRU is, definitely just check out this video here. I got a video on those guys. So nothing too crazy for what we did for the contribution. The portfolio has reached $28,589. I was actually kind of looking back, and I think it was episode 2 of this series, and we were at 26,931, which was posted a month ago. So we've gone from just below 27,000 to $28,589. So again, I just kind of want to stress that out because when I was doing about episode 2, we were kind of going in that downward trend, what we were kind of hitting a month ago. And I didn't sell. I just kept my bi-weekly contributions. I actually sold some of my cash in my high interest savings ETF in PSA. And again, I'll link a video if you don't know what that is. And so I actually, I took $600 and I actually put it into some of the dips that we had. So again, I always stress, it's always hard to play the emotion aspect, but I didn't sell when we were kind of going downwards. So again, after a month, we've gone from just below 27,000 upwards of $28,589. So, I think that's kind of good to kind of see. So just kind of scrolling down here, we also just to kind of look over the past performance of the week. So I have it sorted from the 16th to the 28th. The portfolio together with the RRSP and my TFSA performed 0.9% this week. And individually, it was not 0.9 on the RRSP and 1.1 on the TFSA. And so just for those of you who are, again, new to the channel, my TFSA is like 100% equity. It's 70% XEQT and 30% individual stock picks, and my RSP being 90% equities and 10% bonds. And out of the 90%, 70% of that is my XEQT, and then I do just a few other ETFs as well within the RSP portfolio. But it's, in my opinion, a little less risky and a little bit more diversified versus my TFSA. So it's kind of interesting to kind of just see how the the different market conditions can make different portfolio weightings perform in a different way. So I just kind of find it interesting to kind of see that. So just kind of looking over the individuals. So financials actually being my biggest earner, which again is a complete opposite over I think that like the last 2 weeks where financials have been the worst performing. So again, it's a whole emotional game. I didn't sell anything. I actually bought more. So now hopefully, financials are going to start, paying off because they kind of took a bit of a dive there. Energy being my only negative this week, and that is actually Enbridge at 0.6%. Tech being my TELUS, VDY being my high dividend Canadian ETF, REITs. I have 3 REITs. Again, for the new viewers, we have Smart Centers, RioCan, and Plaza REIT. So they totaled this week at 0.2%. Nothing too exciting. And again, tech is my TELUS. Asset management is the Power Corporation, and my global ETF being XEQT. So that's the performance kind of recap. We did receive, I guess, $2.80 from dividends. I guess I just forgot to show that in the trade log. And that was actually from SRU and Plaza REIT, or Smart Centers REIT. So they actually pay out a dividend every 15th of the month. So it's kind of like my rent day, I guess. But so yeah, obviously we were kind of going into some earnings week. Some announcements are being made, and obviously Tesla took a dive. You can see here they dropped 11% from the start of this week, which is quite significant. So that's kind of something. So if you do hold, world index ETFs like XEQT, or anything like VFE, like the S&P 500 ETFs, those all kind of would have took a little bit of an impact from this drop this week. So that's just kind of something to be aware of. Netflix did have their earnings report this week. Again, being Netflix is held in ETF, so you might have seen a fraction of these losses this week. But yeah, they're basically their earnings. Their earnings per share, they did technically beat it at 2.88 compared to 2.86, but the biggest scare this week was the subscribers that they fell short on. They got 1.75 million versus the 2.3 that was expected, so that kind of freaked out some shareholders. You can kind of see on Netflix it did have kind of a big drop, but it is kind of coming back. Like, I think people kind of saw the subscriptions and kind of freaked out, but they did still meet the expectations of earnings per share. So again, in these times, again, a lot of feelings get put into place, and then everything kind of comes back. It just kind of levels out again. So something to kind of be aware of. So I also just kind of want to highlight on my my Google Finance watch list. So we have some calendar earning reports coming up. So I have this one here I just wanted to talk about. This was a Choice REIT. They're another real estate REIT, obviously, within Canada here. And so they're going to have their earnings report. So I have covered a few REITs on this channel. I probably will cover their earnings report here, hopefully in the next week, depending on when I can review it. So just so you know, that's coming up. We also have Canadian Railway, Google, which is, Google's just like Tesla. Depending on their results, it plays a big role in the stock market just generally on how they're doing. So that'll be another big one coming up here in the next little bit. Microsoft as well. Amazon, that is coming up. So we have some pretty big key players coming, so that could swing our daily gains quite significantly depending on what those are going to report. So again, for all the investors that are here, always just continue dollar cost averaging. These are going to be expected swings. We're going into these market time that in high interest rates kind of typically bring down a lot of the earnings that are not going to show as good as they were a couple of years ago. So just kind of be aware of that, and yeah, we'll see what happens. You never know, maybe the earnings will be fine and we'll all be laughing next week. So one of the things I kind of want to highlight, and this is when I was talking about the PE ratio and comparing it to the S&P 500. Now there's always been a thing where lots of people always like to use is the 20 rule with the S&P 500, and that is taking 20 and minusing the current inflation. So inflation was reported for the US at 5%. So if you took 20 minus the 5, the expected PE of the S&P 500 would be 15. And you can see here that the PE ratio currently for the S&P 500 is 18.56. Now, for those of you who aren't familiar with PE ratio, that is the price to earnings. So this is basically saying if you're buying into the S&P 500, for every $18 you spend on the S&P 500, you're going to be earning $1 of income, kind of thing. So if the rule of thumb of the 20 minus inflation is supposed to be 15, in theory, if you base it off of like past history, we could potentially see a little bit more of a decline maybe in the future. of the S&P 500. And of course, usually the direction or the if the S&P 500 is coming down, potentially some other things are also going to be coming down with it, right? So it's just kind of a metric to kind of use. Again, I don't know. This is just all speculation, and the things you read and how other people are kind of always using other data to kind of direct how they're investing. So I just kind of wanted to highlight that. Everyone's asking if, with these high interest rates, can we expect a larger dip? Well, this is just kind of one thing to look out for. So when you are kind of looking, it's always important to always use the PE ratio. And again, it's only one factor though out of so many. So like you can't just go off of just one factor. And just to use it, just to give you a comparison, if you were to look at like the TD stock, their PE ratio, and again, the PE ratio should be compared to like same industries. So like you can't use a PE ratio of TD Canada Trust and then compare it to like Enbridge or something, right? They're a completely different kind of company. But you can see here for TD Canada Trust, their PE currently on their price and their earnings works out to be 10.11. And then if you look at like Royal Bank, their PE is being at 12.87. So in theory, for every $12 you spend, you get $1 back on Royal Bank, and for every $10 you spend at TD, you get $1 back, right? So those are just really good metrics to use. So using that information in regards to the S&P 500 and the multiple of 20 minus the inflation, we could potentially see a little bit further of a drawback. This week we obviously had an incline, just like the last few weeks actually. But who knows? We'll have to wait and see what happens after these earnings reports, and we'll kind of see what happens. But I hope you guys enjoyed this update. I definitely have a lot more future content coming. I have a video based on the reasons why I have XEQT as my core holding. So I hopefully will be releasing that as well. And another one I'm working on is an RESP education fund for our children. So if you guys are interested in those, definitely make sure you subscribe, hit the like button on this video if you liked it, and we'll see you next time.